Gulf sovereign wealth funds built for decades over oil riches may now face their biggest test yet. As tensions rise in West Asia and energy infrastructure faces disruption risks, governments across the Gulf could increasingly rely on these massive investment pools, originally designed as financial buffers for difficult times. While Gulf countries collectively control sovereign wealth funds, which are worth trillions of dollars, created from decades of oil and gas revenues and invested globally across technology, infrastructure, real estate and financial markets. Major funds include Saudi Arabia's Public Investment Fund, Abu Dhabi's Mubadala and ADIA, Qatar Investment Authority and Kuwait Investment Authority, many of which rank among the largest investors globally. Now, these funds were designed as rainy day reserves to stabilize national economies during crises such as oil price collapses, wars, or even economic downturns. But rising geopolitical tensions in the region, including attacks affecting energy infrastructure and shipping routes, all of this could put pressure on Gulf economies and potentially require governments to tap these services. Now, despite efforts to diversify their economies, Gulf states still rely heavily on oil and gas revenues to fund government spending and development programs. For example, Saudi Arabia's Public Investment Fund, it has deployed tens of billions of dollars globally, investing in technology, infrastructure, entertainment and large development projects which are tied to the kingdom's Vision 2030 plan. But if instability persists, analysts say that some investments could slow as government prioritizes domestic stability, liquidity and fiscal support. While historically, sovereign funds have served as financial lifelines during crisis. During the 1990 Iraqi invasion of Kuwait, the country relied heavily on assets from its sovereign wealth fund to sustain the government in exile and rebuild the economy afterwards. However, modern sovereign funds hold a large share of assets in long-term or illiquid assets, meaning that selling them quickly could be difficult without affecting markets. Experts say that the Gulf funds are unlikely to rush into large sell-offs. Instead, governments may rebalance portfolios, slow new international deals, or increase borrowing while preserving long-term investment strategies. But if regional tensions deepen, the vast sovereign wealth built during decades of oil prosperity could finally be called upon for exactly what it was designed for: a financial shield in turbulent times.